We are now being joined by Mitali Nikor, who is an economist and founder of Nikor Associates. Thank you for joining us.
Thanks, Jyotsna. Nice to be here this morning. Good morning.
Now, let me begin by asking you, do you expect any surprise announcement by the Fed this week? The USPC price index favors a rate cut soon. Could you tell me what your take is on that?
So, Jyotsna, I've been following the sentiments of the American economists, and I think there's a consensus within the American economist community that the rate cuts are not expected in this meeting. What is expected, of course, is a sort of indication to the market so that the market may form expectations about the upcoming rate cuts, which are more likely to come in September. The basic issue that we're noticing at this point in time for the Fed, why the indecision, in a sense, is hanging on, is because of the lack of sufficiently pursuable data. I mean, if you think about it, at this point in time, they're getting early indications that yes, inflation is coming into a range of 2%, which is what is preferred, which is what is favored by, which is what is almost like a target for the Fed. But then there's also the contraindication of unemployment, and unemployment has come in at 4.1%, which is far higher than the 3.4% that they were expecting. Also, a lot of economists in the US predicting that unemployment could go up to 4.5% by the end of this quarter. So, with this conflicting data, while at one point, you are compelled to reduce rates so that, borrowing costs reduce, but then at the same time, with unemployment data, you might think, okay, is this the right moment or should I wait for another 2 months to be sure?
Talking about rate cuts, do you think the Fed's Monetary Policy Committee will unanimously agree on the rate cuts by September? That's what the market seems to be pricing in at the moment.
So I do think that it is impossible for rate cuts to be announced if the Monetary Policy Committee does not have unanimous agreement. And that's because of the timing of these rate cuts. I mean, if the rate cuts are announced in September, that would be just 2 months before the US election, and which signals a situation that there needs to be a broad-based consensus within the Fed's Monetary Policy Committee to be able to put their weight behind the rate cuts and sort of divorce that from the overall political scenario that would be gripping the nation. So therefore, I do expect that a broad-based consensus would be a necessity for such rate cuts to be announced in September.
It's interesting you talked about the November elections. Could we possibly see two rate cuts then this year, one in September and another in December?
So a lot of American economists are expecting that. In fact, a majority are expecting two rate cuts, one in September and one in December. And I think the only circumstance in which we won't see a rate cut in September is if, the consensus building that I was just referring to does not happen. And then why would that not happen? Is because of inflation data. I mean, if inflation data does not suggest for the next 2 months that the inflation is coming down, it's coming within the 2% range, that is the point at which different members of the Monetary Policy Committee may come in and say, we don't agree because inflation data is clearly not pointing in the direction that we need. And even if unemployment is increasing, inflation is a bigger target for for the Fed. So therefore, the only circumstance that I feel in which the rate cut wouldn't come in September is if there are any sort of fluctuations on inflation, which are surely less likely. So the likely direction is two rate cuts.
All right. So before I just let you go, in short, how do you expect markets to react when the rate cut style begins? Right. Will there be a correction in the markets from the current levels?
So this is also being very intelligently managed. I mean, the fact that, we're having this meeting in a few days in July will sort of bring in, this already, it will be like setting market expectations. And, so markets will be moving that direction of, okay, we expect an announcement in September. So therefore, because the expectations are already set, we don't expect markets to have a very strong reaction. We then expect markets to already expect that rate cut, build that into their investment planning, and then have a more muted reaction in September. This actually is the outcome that the Fed, I believe, is going for, given that the markets will already be a little bit turbulent, in advance of the election. And I think that in December, the rate cut, which comes in this, maybe that will be a bigger one, will then have a bigger impact on markets, and that will also depend on the election outcome. So I think these two events together will determine on the direction where the market goes. But I do expect the markets to price this in already, one smaller rate cut in September.
All right. Well, that was Mithali Nikor, who is an economist and founder of Nikor Associates. Thank you so much for joining us and giving your insights, Mithali.